This year's budget was always likely to be a balancing act. Given the current coronavirus restrictions, the government on the one hand want to encourage people to get out and spend more money as we approach what's hopefully going to be a more normal summer. But on the other hand, we have to start looking at tax-raising measures as we try to repay some of the debt which we have built up over the last year. So we saw an extension, for example, of the furlough payments, which again is around trying to help people over the next 6 months move forward. From a taxation point of view, the biggest increase in tax was to corporation tax, and that's coming through from 2023. So that's the tax which affects profits which companies make. So no direct impact on individuals, but it might mean that companies put up prices as they start to pay more tax from 2023 onwards.
For workers and personal investors, there was very little change to the tax rates they pay, and the government kept its pre-election promise of not increasing the rates of income tax, VAT and national insurance. However, the lack of change will have an impact on the tax people pay. The personal allowance, which is the amount someone can earn each year before they start paying income tax, is increasing to £12,570 from April 2021. However, from that point, it is going to be frozen until April 2026. The same is also applying to the threshold from which higher rate income tax applies, and this is increasing to £50,270 on the 6th of April, before again being frozen until April 2026. Now, freezing these allowances and thresholds will mean that more people will pay more income tax as their income increases over the coming years, and this will raise additional revenue for the Treasury.
From a pension perspective, the biggest change was a freezing of the lifetime allowance. So the lifetime allowance is the limit which restricts the amount that you can take out of a pension tax efficiently, and that's measured when you take benefits at retirement. And that's currently just over £1 million, and it's now going to be frozen at that level until 2026. And now £1 million sounds a great deal of money, but when you're looking at a pension retirement period of say 25 or 30 years, it does come down to more realistic levels. So that might mean a pension and payment of around £28,000 a year. Now that's very generous, but not necessarily the hugely wealthy amounts of money that a £1 million pot might look like. So that's the one area to look out as far as pensions is concerned.
As for inheritance tax, the nil rate band of £325,000 and the residence nil rate band of £175,000 are also being frozen until April 2026, but they are not being increased in this current year. Indeed, the nil rate band was frozen at £325,000 in April 2009, and therefore this will remain at the same level for a period of 17 years. As we see property prices and investment markets rising, more people will be caught in the inheritance tax trap when, without planning, this will reduce the money available to beneficiaries and future generations. For investors, there was expectations around capital gains tax, and some felt these would be significant. However, the only announcement was again a freezing, and this time of the annual exemption. It is currently £12,300 and again will remain at this level until April 2026. Now, these changes, coupled with the freezing of the pension lifetime allowance, will mean that over the coming years more people will be paying more taxes. The government needs the economy to recover from the pandemic and generate revenues, and this will happen when people start spending money. And when that happens, we could see more changes to the UK tax system. The cost of borrowing for the government is currently very low, but as Mr Sunak pointed out, a small increase in interest rates will have a dramatic impact on the financing of government debt. So the more tax changes could be on the horizon, and the government says it wants to build a tax system fit for the challenges and opportunities of the 21st century, and this can't be done without change.